Hi, I'm Phil Grande of philsgang.com. Over the years, I've successfully taught tens of thousands of investors how to navigate the market with confidence. Become a Phil's Gang member and receive the training, the advice, and the software that will take your investing to the next level. I have a team comprised of successful investors, all with proven track records. And Phil's Gang software is easy to use, painless to navigate, and tells you exactly when to buy, when to sell, when to hold, when to run like hell, even short. Learn about common market mistakes and how to minimize them. You don't have to be a seasoned investor to benefit from Phil's Gang and platform. No matter what level investor you are, my strategies for investing are designed to put you on the path to success. Sign up for the 10-day free trial to see our platform in action. Avoid market pitfalls and start winning with Phil's Gang. Learn more at philsgang.com. That's philsgang.com.
At St. Jude Children's Research Hospital, we're fighting against childhood cancer every day. At the heart of this battle are our donors.
Most of us want to make some type of difference in the lives of others. St. Jude does miraculous work.
The fact that no one has to pay, it's a place where everyone is treated as an equal.
Everybody is welcome here. And it doesn't matter your religion or what part of the world you're from, all that is taken away. It just gives you some hope.
It's just a nice feeling to put your energy into something that really does genuinely make a difference in a child's life.
There's just no greater gift. If we have the ability to help, then we have a responsibility to help.
Finding cures, saving children. St. Jude Children's Research Hospital. Find out how you can help at stjude.org.
You're not alone. 80% of those in the stock market, just like you, lose money. Hi, I'm Phil Grande, philsgang.com. Why do they lose? Because they don't know how to short stocks in down market. That will change once you use my patent Pro 2 color-coded chart. It works. The technology works. And it not only gives you an edge on the upside, but Pro 2 will put a smile on your face on the downside. That's right. Check it out. Free 10-day trial at philsgang.com.
What if you could have an in-depth understanding of the stock market just like the pros? Well, thanks to Phil Grande and philsgang.com, you can. philsgang.com offers comprehensive, up-to-date market information designed to help you understand and anticipate market behavior. With philsgang.com, you'll build your investing confidence even through down cycles and periods of uncertainty. Go to philsgang.com. philsgang.com today. 877-600-GANG. 877-600-4264.
Why are investors listening to Phil Grande of philsgang.com?
You know why people listen to my show? Because I make it simple. When you talk about the stock market, they make it so complicated. I make it easy to understand. For the average investor, the Main Street investor, most of the time, these guys, like they're talking to each other. We talk directly to you and we listen to you.
Invest better with the sound advice of Phil Grande at philsgang.com. When you listen to the advice of Phil Grande at philsgang.com, you'll find investing in the stock market makes sense with the right guidance.
People keep saying to me, boy, things are hard, things are tough. Boy, the market's really screwed up. And I don't agree with them. For us here at Phil's Gang, we make it so it's simple. It doesn't matter if the market's bad or good. We consistently do well because we make it simple. And just like for my listeners on the radio or on the internet or my podcast, we make it simple. We try to break it down so you really understand why the market is going up or why there's continued inflation or why the bank rates are going up. So you understand, especially yields. The most important thing to understand how yields work. Just what we do. We work hard at it.
Trusted advice, easy to understand strategies that will make you a better investor. Get all the details at philsgang.com. That's philsgang.com. Why are investors listening to Phil Grande of philsgang.com?
You know why people listen to my show? Because I make it simple. When you talk about the stock market, they make it so complicated. I make it easy to understand. For the average investor, the Main Street investor, most of the time, these guys, like they're talking to each other. We talk directly to you and we listen to you.
Invest better with the
The stocks discussed on Phil's Gang are not in any way a recommendation or solicitation to buy, sell, or hold. If considering acting on information presented, we first recommend you seek out a competent, licensed professional for advice. Get ready for the radio show that tells you what Wall Street doesn't want you to know.
Oh, I'm a money magnet. Money's coming to me. Money sets me free. I'm a money magnet. Money's coming to me.
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Radio Network. With your host, Phil Grande.
And good afternoon and welcome to my podcast and radio show. What an interesting day today. Big shock to everybody. I thought we were told over and over and over again that, wow, the labor market is so strong. And because the labor market is so strong, the economy is so strong. And because the economy is so strong, that's why the stock market's going up, because we're getting good earnings. Well, that hasn't been the case, but we've known that all along. In fact, I had to laugh. I was watching the people on Maria Bartiromo's panel, and I'm saying to myself, they all acted surprised about the job numbers. Then what the hell are they doing on the panel? They shouldn't be on there. Everybody knows the market's forward-looking. Everybody knows this is what is the truth. But here's what we get all the time. See, they always take parking space in our head, these financial networks, okay? Fake business news networks. They always take parking space in our head because they think that we sit on the world's longest stupid bench. Listen to this stuff they've been telling us all along about the labor market. And I've been saying the opposite.
The evidence of the past few years is don't underestimate the strength of the economy, the resilience of the economy, and particularly the labor market.
Okay, take a look at this chart. Are you kidding me? Right here. Take a look at this chart. This is amazing. This is the labor force participation rate. This is so important. This is what drives your economy, people working. So if you go back here just go back to 1980. Look at the amount of people that were working. Look at this, okay? But look what's happened here since 2000, since the dot-com crash. Look at that. Why? Why is that? Well, because the difference is we had an economy when we were driving this economy right here, when this economy was strong, we had a strong labor market because we were putting in business investment. You invest, and then you increase productivity. And then from increasing productivity, wages go up, jobs go up, people make money, they consume, they start consuming, you have a healthy economy, and your labor participation rate is up. We've had the lowest labor participation rate since November 2022 at 62.2%. And that's another thing. They just told us that our GDP grew from a minus 0.5% to 3%. Everybody was celebrating. That is not possible. Not when you have the lowest labor participation rate since November 2022. It makes no sense. Anybody will tell you that if your labor participation rate is contracting, you don't expand your economic GDP growth. But they're telling us we did. So again, but look at this chart. This chart's telling you everything. The difference is when we started with all this tech stuff, starting in 2001, the dot-com crash, we never grew our economy because we never grew our labor participation rate. The amount of people that are actually all working. We didn't grow it. So we've been masking all of this mess with, oh, look at this. We got Bitcoin. We got gold. We got the stock market, highest ever. But the stock market, remember, is different from the economy, because the stock market's driven by what? Zero interest rates, stock buybacks. Another increase the money supply. Now, this is interesting. Look at this. So if you take this is our labor participation rate. You've got to have a strong participation rate to grow the economy to 3%. We didn't. It's going negative. Now, here's one of the reasons, but we've been masking it with a strong stock market. But what's pushed the strong stock market? How'd that all happen if there's no business investment? Well, it's easy. All you do is print money, and you put in and just keep increasing your M2 money supply right here. Look, see? So as we're increasing the M2 money supply, see it going up? And then you look at your labor participation rate, it's going the opposite way. So what we're doing, we're pushing all that money, okay, into the same areas, into big tech, into 7 stocks. So you have 7 stocks pushing this whole stock market up. So that's what, and then on top of that, so not only are you using your M2 money supply, okay, you're pushing all this money in from, think, we in 2000, used from 2000, 2001, the money supply was at 5 trillion. We increased it to where we are today to 22 trillion. And all that money, again, remember where all this money goes. Everything's to push these same stocks every day. So listen to this.
The labor market's very healthy and the U.S. economy is doing fine.
That's what they've been selling us. But the labor market's not healthy. And we found that out today, didn't we? See, that's why, again, today we have the establishment survey. That's a piece of garbage. And we have the household survey. That's a little better. Because remember the difference. The establishment survey, that tracks the jobs gained or lost in just manufacturing, healthcare, and retail. The household survey is the one you want to look at because it tracks almost everybody, the self-employed, farm jobs, independent contractors, freelance, everybody you can think of. But remember, the household survey is where we get our unemployment rate from. That's where our unemployment rate comes from, 4.2%. So that's the one that's important, not the established survey. And look at, what do? They keep on revising the jobs down. So here they're telling us how great the economy is doing, right? But look what was going on with the job numbers. The job numbers were horrible, just horrible. And we had, I think we dropped. Let me just look at here for you. I mean, this was crazy what was going on today. So we had 73,000 jobs in June. We revised our jobs from 258,000 down May and June. So wait a minute, we had 258,000 jobs revised downward for May and June, and then here we are in July, we only have 73,000 jobs, and we have an unemployment went up not down, 4.2%. Then we have the lowest participation rate since 2022 at 62.2%. But how did our GDP go from 0.5 to 3%? It didn't. It's all a bunch of nonsense. Now listen to this.
Right now we're in a good position because the labor market remains strong in the U.S.
See, that's all they've been telling us. The labor market's strong. The labor market's strong. And it hasn't been strong. It hasn't been. And that is why Powell has been fighting everybody to say we can't cut rates. We can't cut rates. So today this whole thing blew up. And again, always look at that labor participation rate because that's the one that's important. That's the one that gives us our GDP growth. So they fudge from that where we were negative 0.5% to we were up 3%. You know, I heard that number. I said, how could that be? Now, another thing too, how can you have a strong labor market and a strong economy? Remember, a strong economy comes from a strong labor market. If you have a strong labor market, that means people are consuming, they're saving, they go spend. But wait a minute. If you look, they started right after 2020, they started to raise rates. It was killing the consumer. You know, they also, remember Jamie Dimon, I talked about this yesterday on my other podcast. I said, hey, Jamie Dimon saying, wow, the reason why our economy is so strong because people are still spending their money from COVID. And he says, we put $6 trillion in the hands, in the pockets of the folks on Main Street. No, that was a total lie. It was Main Street folk. Yeah, they were there, but also airlines, schools, municipalities. I mean, are you kidding? I think at the end, each person got, I think, $8,000. But their cost of living, okay, wipes that out. I mean, are you kidding me? So, but Jamie Dimon's lying and telling us, hey, here, listen. I think we have it right here. Listen to this. This is nuts.
The consumer's in pretty good shape right now. They still have excess money from COVID. If you go back to looking at the amount of money that was spent during COVID, it was 6 trillion, 6 trillion, 6 trillion, 6 trillion, 6 trillion, 6 trillion, 6 trillion.
6 trillion. 6 trillion. No, that's not true. The 6 trillion was split up with businesses and government and cities and police and hospitals. Oh my God, these people. But they've been able to make and again, when you look at a labor force on this chart here just declining, that means your economy's declining. But they're able to mask that with all this noise and all the noise of, hey, Bitcoin. Let's look at the Bitcoin. All they do is talk Bitcoin, Bitcoin. Then they talk about the stock market, right? Stock market, Bitcoin. They talk about gold. These are the things that the folks don't have anything to do with. They don't participate in the stock market. Remember, 95% of the stocks, the profits, go to the 1 percentile. So while the participation rate was dropping, interest rates were going from, think about this, interest rates went from 0.9%, okay, in December 2020, that was COVID. Remember, they dropped rates. Then a year later, it was the same. But now we went from 0.9% to 4.1%. From 0.9 to 4.1, that was 2022. Then we went to 5.3% a year later, 2023, and 2023 was 5.3, and then we were around right where we are now, about 4.4. So again, the consumer on Main Street, the guy who makes 65, 70 grand a year, has 3 kids, he hasn't got a chance. They're struggling. And so the reason they're struggling, here's the evidence they're struggling. Jamie Dimon tells you, oh no, they got a lot of money, all that money they got from COVID. Are you kidding me? They blew through that money in what, 3 months or 4 months. So the bottom line is car payments, the delinquencies are the highest in 33 years. The credit card delinquencies, the highest in 30 years. The home mortgage delinquency, highest in 17. These are all new numbers, fresh numbers came in this week. Refi, cash out of their home. New record, $21 billion. Now they're taking all the equity out of their homes. Home-related expenses increased from 30% to 48%. Why? Because you got interest rates going from 0 to 4.4%. And the jobs are crap jobs. They're all service jobs because we're not building an economy anymore by putting in, it used to be we'd always take and put working capital into drive businesses. We'd lend, it was always business investment, new machinery, new equipment. Let's keep building. No, they got rid of all that for tech stocks, for 5 tech stocks. That's all they talk about. So that's what is going on. And then then again, remember, we had, I'm trying to find it. Oh yeah, and then remember, they're telling us, well, it's different this time as the stock market keeps going up. Well, it's different this time. Well, wait a minute, hold on. Right now we have, and we talked about this yesterday, the overvaluation of the S&P today is the same as it was right before the crash of 2001. But everybody says, no. It's different now. It's different than it was 25 years ago. We have a stronger stock market than we had 25 years ago. Different this time. And the reason is because it's more techy. More techy, this guy was saying today. It's more techy. And we have better productivity. We have better management. What the hell is he talking about? I'm going, are you nuts? Are you absolutely nuts? Unbelievable. And then he says the fundamentals are so much stronger today than 25 years ago. During the dot-com crash, when it went down 75%. So don't worry, we're not going to have a crash again. Because that's what they're saying. They're saying it's different this time because it's more techy, we have better productivity, we have better management, the fundamentals are much stronger than 25 years ago. Really? When the dot-coms crashed 75%? Are you nuts? It doesn't matter. So the tourist investors, they're in there buying stocks. They're investing about $50 billion a month, buying stocks, mostly tech stocks, and they don't care what the PE ratios are or the valuations are. If you look at the spiders, right, the PE ratio is around 22. Now remember, the PE ratio is also used for measuring our valuations, which are crazy right now. So the P ratio is 22. So think about that. That's far above the 5-year average of 19 or the 10-year average of 18. That's nosebleeds level 22. But they're still buying stocks. They don't care. They don't care because they say, oh, it's different this time. The market's more techy. Unbelievable. Just unbelievable. So there was no surprise here today. The bond market even told us. Not only the bond market was telling us that, I mean, the bond market was so clear this was going to happen, but nobody wants to follow the bond market. I'll be right back after this break. Join my gang, philsgang.com.
On the show, go to philsgang.com or give them a call at 877-600-GANG.
At St. Jude Children's Research Hospital, we're fighting against childhood cancer every day. At the heart of this battle are our donors.
Most of us want to make some type of difference in the lives of others. St. Jude does miraculous work.
The fact that no one has to pay, it's a place where everyone is treated as an equal.
Everybody is welcome here, and it doesn't matter your religion or what part of the world you're from, all that is taken away. It just gives you some hope.
It's just a nice feeling to put your energy into something that really does genuinely make a difference in a child's life.
There's just no greater gift. If we have the ability to help, then we have a responsibility to help.
Finding cures, saving children. St. Jude Children's Research Hospital. Find out how you can help at stjude.org.
Hi, I'm Phil Grande of philsgang.com. Over the years, I've successfully taught tens of thousands of investors how to navigate the market with confidence. Become a Phil's Gang member and receive the training, the advice, and the software that will take your investing to the next level. I have a team comprised of successful investors, all with proven track records. And Phil's Gang software is easy to use, painless to navigate, and tells you exactly when to buy, when to sell, when to hold, when to run like hell, even short. Learn about common market mistakes and how to minimize them. You don't have to be a seasoned investor to benefit from Phil's Gang and platform. No matter what level investor you are, my strategies for investing are designed to put you on the path to success. Sign up for the 10-day free trial to see our platform in action. Avoid market pitfalls and start winning with Phil's Gang. Learn more at philsgang.com. That's philsgang.com.
Welcome back. Learn, invest, and make profits with Phil Grande. Simply go to philsgang.com. Now, here's Phil.
Right now, we're in a good position because the labor market remains strong in the U.S.
Oh, really? Well, let's go back to the labor force participation rate chart. Here it is. There it was in 2000, okay, when the dot-coms, go back to 1980 right here, okay. Actually, let's go back to the 70s. That's when we started to outsource. Right? So, and then by the time we got to the 1990s, we were pretty much outsourced, right? And that's when you started to see our labor market by 1995, 2000 start to tank, because remember how this worked. When we started to outsource and we got rid of all these jobs, and we were just so lucky at the time that tech was coming aboard. We've always been lucky. All through the decades, as soon as something went out, we could replace it. We had the Pony Express, but they finally had the telegraph line came, so that was gone. Then all of a sudden we had airlines, and then we had that industry, then cruise lines. Then we had, at the same time, we had steel. All of a sudden we had steel, so we're building steel. We got steel to build buildings with, we got railroads. So we're always finding something new to grow the economy. That's why we've been so strong. But when we started to outsource back in the 70s, okay, you can see when we peaked here, by the time the outsourcing was done, it was over. But here's the thing, the labor participation rate from 2000, as soon as that dot-com crash collapsed, and so when you see the labor participation, and here's 2020, right, when it dropped in 2020, we never recovered fully. We didn't recover it, and we're still on our way down now. So that's why you can't follow what they're telling you. Everything they're telling you is just a bunch of nonsense, okay? I mean, it just is. And so when you're investing in stocks, you've got to be following the money, just the money. If you're not following the money, you're never going to make money because you're always going to be on the wrong side of the transactions. But again, it also goes back to these interest rates. Interest rates are killers. So our labor participation rate is going down. And the jobs, if you go back and take a look at May, do you know most all those jobs that we had back in May and June were all mostly government jobs? And I'm not talking federal government. I'm talking, federal as well, but I'm talking a lot of it was counties and cities, and that's how they're trying to keep this economy alive under Biden. He was trying to, they kept on hiring more and more and more people, more government workers in cities and towns and counties and the federal government to try to keep the economy going, trying to build the jobs, because you can't build jobs unless you do business investment. You got to, when you have a business, if you can the small businesses are the most important thing we can get involved with, because small businesses is the heart and soul of the nation. And when you used to have, years and years ago, going back in the 70s and 80s, when you had businesses, small businesses, and you had banks that would lend you, and you had people who would participate and shove all this money into these small businesses and take them and nurture them and get them going. We had such a strong economy because we had small businesses. And so when we started to outsource all this big stuff, it was the small businesses that were doing the heavy lifting. And you get better jobs from small businesses. And the small businesses, remember, they get eaten up by the big businesses because the small businesses that have all the patents and they have all the ideas. And matter of fact, if you remember Cisco, remember when they started? Cisco, they were buying about, 10 companies a week. It felt like 10 companies a day. And that's what they kept doing, getting more and more money from Wall Street. They kept buying small companies because the small companies, they don't have all the bureaucracy. They don't have to get all the permitting, and they can get the patents in and get things going, and the big companies can't do that. They come in and buy those. So so things were really going well. But now what's happened is the technology has turned on us because there's only so many, and especially the AI now. And that's why Trump is trying to get people to, become an electrician, become a carpenter, become a mason, right? Everybody can't be an AI. So what's happened is more and more of our jobs are going to go away, and our labor participation rate is going to keep sinking. And again, that's why I was stunned when I saw the number come out when we were at negative, 0.5. And we shot up to 3%. I said, how the hell can they do that? That's incredible. And then everybody's now depending on the stock market as the Magnificent Seven.
I think that we've been so focused on the Magnificent Seven, and we really haven't dug into the details here. And actually, more than half of the Magnificent Seven have actually underperformed the S&P year to date.
There you go. But everybody's buying. And now, who's everybody? Not the institutions. The institutions, remember, the hedge funds, the pension funds, the mutual funds, the big banks, all the big different, the whole group of institutions. They're the ones that used to be buying all the. Now, I'm not saying they're not doing it now. I'm not saying that at all. But they cut it way back. And matter of fact, they admitted it about 2 months ago. And what was pushing the Magnificent Seven up was the $50 billion a month from the tourist, and he's going to get killed. The tourist is going to get killed. They always do. And here's the thing about that too: the tourists are coming in. They no longer care about what the valuations of companies are, they could care less. Because, again, they're tourists. They're not professionals. And they keep saying, well, it's different this time. The stock market is more techy today. As we have better productivity. We have better management. What a spin that is. What a bunch of garbage. Are you nuts? You got to be nuts to think that. And they're telling us the fundamentals are so much stronger today than 25 years ago when the dot-com crashed. So we're not worried. The tourist investor, we're not worried at all about valuations. Because, again, we don't care that the PE ratio right now on the S&P is 22, which is at a nosebleed level. And remember, the PE ratios are used to measure your valuations, and the valuations are insane. I gave you a chart the other day of the valuations. I think I have it here. Let me look. So if you didn't see it, that was my other... I do a podcast every day at 3 o'clock on Instagram. So let me see if I can find that for you, because that was a good chart. I think it's in show, right? Let's see if I can show folder. Yeah, here it is. Right here. There you go. Look at this. Look at this. So what they're saying is the tourists, here's when the dot-com crashed. This was right here. The S&P 500 hasn't been this overvalued since the dot-com bubble. Look at it. And here we are today. We're almost right there. But here's what they're saying. We don't care about the valuations. We don't care about the PE ratios at 22. I mean, think about it. The PE ratio at 22, let's go compare the 5-year average, is 19. The 10-year PE ratio average is 18. We're at nosebleed level, but they're saying it doesn't matter. And it doesn't matter what the PE ratios or the valuations are. It doesn't matter because, again, we look at it as optimistic. So when they see that the valuations are insanely high, and they look at and they are, the PE ratios are at nosebleed levels, they take it as when the PE ratios are nuts and the valuations are nuts, and even when you show them this chart, it doesn't ring a bell to them. They don't. What they say is, well, that's called optimism. This guy was saying the other day on I think it was CNBC. That we take it as optimism. These are the tourist investors who don't know what they're doing, and these are the guys who have been driving the whole stock market as in the last 6-7 months. Okay, who are in the $50 billion a month in tech stocks, and they're looking at it as a thing. With these valuations so high and the PE ratios out of whack, it's a signal of optimism to them. That's how they view it. And they are willing to pay. This guy was saying, we're willing to pay even more for stocks because we expect and we believe, especially with all this AI, there's going to be bigger profits, and we're going to make more money. So it doesn't matter the valuation. This is how they're thinking. And that's why the stock market keeps going up and up. And then what the fake business news network does every day, it keeps pounding that the message that, wow, everything's just wonderful, right? The labor market's healthy.
The labor market's very healthy. And
I showed you the labor market. Does that look healthy to you? Does that look healthy to you from 2000 all the way where we are today? That's not healthy. And today we got our nose pretty bloody today. I mean, that was terrible, that jobs report. I mean, are you kidding me? We had 73,000 jobs. And if you look at the revisions for May and June, that's 258,000? You got to be kidding. And then the unemployment, how can you have the GDP going to 3% from a negative 0.5% to 3%? When you got unemployment rising to 4.2%. Would somebody explain that to me? And then you got the labor participation rate at 62.2%, the lowest since November 2022, and you got the GDP going from 0.5% to 3%? See, everybody is so tied up into Look at Bitcoin. We're all getting rich in Bitcoin. See, they're masking all this with the Bitcoin and all this other garbage and the 5 tech stocks and NVIDIA. Look at NVIDIA now. Look at all the AI stocks. God, we're in AI stocks. We're making a ton of money with our AI stocks. But it doesn't help the economy. It doesn't help the main. Once you blow out Main Street, and that's what's happening. Main Street is not participating in the Bitcoin. They're not participating in the stock market. They're not participating in all these things. And once you leave them behind, and now the only kind of jobs they can get is service jobs, because our national debt has grown so much and our deficits are insane. That means we have to keep borrowing and borrowing. The government has to keep going and borrowing and begging for money and having these auctions. But there's a problem. As the interest rates go up to attract foreigners and attract all this money that we can borrow, they keep putting up the interest rates. But the problem is all the money put in the banks by our workers, our workforce. They hear, whoa, wait, how much can you get if I buy a bond? I can get 5%? What's savings right now? Oh, 0.25%? Oh, I'm going to take my money and I'm going to loan it to the government. That's called crowding out. Now, you have a successful business. You have 25 employees. Company's doing well. Now you could double your business if you just expand. You just need to expand. You need about $1.5 million to expand, build onto your company. We need more IT stuff. We need more machinery, but we can double it, and then we could almost triple our labor force. Go to the bank. Remember, these little companies can't go to Wall Street. They go to the bank, and the bank says, "Oh, sure, we'll give you the loan, no problem. It's going to be 10%." And he says to the banker, wait a minute. I was here 3 months ago with my blueprint showing you, and it was only going to be 5.5%. Why is it doubled? Well, because you're getting crowded out, because the government is begging for money. The government keeps spending. They don't cut back, and the deficits are getting bigger. And with the tax cuts, those deficits are going to get bigger. So the problem is the government's begging for money, and as long as when you go to the auctions and they can borrow money and give people good interest rates, people are taking all their money out of the banks, out of the savings and checking accounts, and they're lending it to the government. So that's another big thing they don't talk about. So the bottom line is this.
You got 30 seconds.
Look, you gotta watch the JOLTS number. JOLTS number. That's the number you got to watch right there for labor. When you see that number keep going down, job openings keep sinking and sinking, whatever you hear, when you hear this bullshit, sorry the language.
Right now we're in a good position because the labor market remains strong.
That's all that is. It's just BS. That's all it is. Because two things will tell you the truth. Your bond market and your JOLTS number. And then you just need to know how to trade stocks, and we'll help you with that. Join my gang, philsgang.com, free for 10 days.
You have been listening to Phil's Gang with your host, Phil Grande, on the Off the Wall Street Radio Network. Off the Wall Street Radio Network. Remember to visit Phil's website at philsgang.com. That's philsgang.com. Or call the office, 877-600-4264. That's 877-600-4264.